Okay, guys, sorry about that. Some of our images didn't show up and we had to do some last minute fixing to make it look good for everyone. Can everybody see my Discord screen and YouTube screen? If you're on there, let me know. I hate to start without confirming. Ha ha, which is coincidentally the first lesson. All right. I love dad jokes. I can't help it. Okay, so we have a really big section tonight. Those of you that have been here for a while with us, you know that I am not a scanning type of person. I stick to my own little Sarah universe, if you will, and that keeps me pretty busy. So I'm going to cover the first two sections, and then Alex is really going to get into the weeds of scanning because he's really good at it, which complements, my lack of scanning. So let's get started. So the first thing we're going to talk about is confirming and negating. What we use and look for to confirm and negate, psychology of confirming and negating, and the methodology behind the logic there. So sectors and indexes. Confirming and negating is done by using the four indexes: SPY, QQQ, IWM, and DIA. And I actually have a futures layout with all the futures on my 4-chart layout so I can see what they are simultaneously doing all at once, which is helpful because we like market correlations, as well as the sector ETFs, which Alex has a link here. I'm not sure if it's clickable. Oh, yep, I think it is. When confirming and negating, we are analyzing all sectors and ETFs and their respective holdings to identify trapped traders or identify relative strength and relative weakness. So the psychology behind this is we know that each directional move will either be confirmed or negated. So for example, if we trade a 2-up on a Monday, Tuesday, we will either continue Monday's move by going 2-up, or we will reverse Monday's move by going 2-up, 2-down. So the 2-up on Monday would be confirmed by the 2-up on Tuesday, and the 2-down on Tuesday would negate Monday's move or direction. This concept is used to find losing traders, as we can identify where longs or shorts are being reversed and where they are forced to stop out. Because if they were right on Monday and they were long anytime during Monday, on Tuesday, if we take out Monday's lows, they're no longer right and they have to exit. So this is how we know where the losers are. And the whole turnaround Tuesday thing. So we will cover some examples here. So SPY, IWM, DIA trade 2-up on Monday, but QQQ forms an inside bar on the daily. QQQ will either confirm the direction, trading a 1-2 up, or negate the direction by becoming a 1-2 down. We can also identify that QQQ is weaker than the other indexes because it stayed an inside day and it was too weak to take out the previous day's highs and go 2-up. So QQQ would be showing relative weakness to the other three indexes. Should the market reverse, QQQ would be the first to trigger in the opposite direction because it was the weakest. So methodology. Now for confirming and negating within a sector or index. We're going to use the same idea, but use the underlying stocks of the index to identify strength and weakness. In this example, SPY became a 2 down on the week, and within SPY is BA, and BA closed as a 3-1 actionable signal, and then we get a new weekly candle. So once we go 3-1-2 up in force, anybody who was short last week has to get out because they're now losers, and continuity has changed with this inside and up starting the new continuity on the week. So anyone who is short in BA has to close because we reversed. Changed weekly continuity, changed daily continuity. Here's another example showcasing sector specific relative strength. So during that same period, 2 down week in SPY, the cruise lines, during that same period of 2 down week in SPY, the cruise lines formed inside weeks. So you can see here, RCL was an inside week, NCLH was an inside week, and SPY,
yeah, 2 down.
2 down. Okay, sorry, that confused me because it was the second candle on these. So, okay. So they were inside week, and then SPY was 2 down. So on the next week, should they break up, they would be considered to have relative strength. As they did not go 2 down, they stayed inside. So they were strong enough not to take out the lows and become a 2 down, whereas SPY was weak and it took out the previous week's low and became a 2 down. So these two show relative strength to what SPY was doing. And the same idea can be applied to all of our actionable signals. So if the whole market dropped last week, forming a bright red 2 down, like this bright red 2 down, anything that is a hammer on the week, which would be close to triggering a 2 down, 2 up actionable signal. So should the market stiffen up as an inside week, the following week, all of the shorts of the previous week would be forced to exit, as you can see in CVX. So CVX went 2 down and then 2 up. So anybody who is short within this has to exit because they're no longer correct. And we know where their stops go. So scanning, given what we know, it is as simple as identifying strength and weakness via scanning for inside bars, hammers, shooters, and rev strats, so our actionable signals. Some traders will opt to trade only a specific setup, like a 3-1 or a rev strat, and that's totally fine. You can just get really good at doing one thing as long as the conditions are correct. Fact, when a rev strat occurs with full time frame continuity, we have no reason to believe that that setup should not work. So we expect those to work because we're going back into full time frame continuity. And some traders choose to only trade this setup, and that's, again, fine. So during higher time frame candles, we can also scan for in-force patterns and look for additional signals to reconfirm what we already know to be true on the higher time frames. And this is kind of what we were talking about last night with the take action window. So if we're in force on the monthly and we're still good and we haven't hit magnitude, we can look for lower time frame actionable signals to either add or participate because we know that everything's all good, we're in force, full time frame continuity, everything's lining up. So for example, while XLU is a Momo hammer in force on the month, which you can see this white line, I lost my spot, hold on, and an inside bar in force on the quarter, any additional signals on the day or week, they're actionable. You can add to your position. So you can see here on the day, remember, this is the monthly Momo hammer, which is shown here, but you have an inside bar on the daily that you can add to that position because we know we have the higher time frames on our side, full time frame continuity. We have every reason to take this. And you can see, so by scanning what's in force on the higher time frames, we can then look to the lower time frames to reconfirm the higher time frames. And then, so down here, given that we have the month, the quarter, and daily signals reconfirming, we can widen our stop to a reversal against us to guarantee a position that should continue to be true. And if you paid attention yesterday in the stops, a reversal against us would be trailing on the lows of the candles, because as long as we're still twoing up, we're still good. There's no reversal against us. Therefore, there is no reason to get out. And trailing like this is a great way to stay in. You have no fear, and you will stop out in profit if that's what you choose to do. So the reason we look to do this, instead of taking the monthly or quarterly trigger, even though some will, is because the more actionable signals we have in force across 4 or more time frames, the more confident we can be in the trade working out. And this also kind of goes back to yesterday with are you simple stratting? If you're simple stratting, the higher time frame signals are lower time frame targets, and typically why we don't want to be the first ones in those. Since our signals are responsible for price movement, if we have many of them lined up at once, we can expect that it should work. And you can see it does. So you got TSM on the year, 3, 1, 2, up. We have an inside quarter that probably triggered. I would assume that line's not there, but I would assume this inside quarter triggered the 312 up year. So using, again, all these different time frames to reconfirm or trigger our actionable signals on a higher time frame. Here we have, it's either an inside, I think it's an inside and up to reconfirm the year in force. So these are all reasons to want to be a participant to the long side. Before I get into simultaneous breaks, does anybody have any questions on that part? I know it's probably a lot, but again, you guys are not going to learn this the first time around. You're going to need to watch this more than once, try and apply it to your charts, really understand the concepts behind everything. I wish I could have just learned this once, like after one go. Once you learn it, it's very simple. If you're new and don't understand all the concepts, that's when it seems not simple. Yeah. Okay, I'm going to continue. If there's any questions, I can take a moment and answer them. Okay, so simultaneous breaks. What are they? What does it tell us? Identifying them pre-break, a pre-break example, another pre-break example, identifying it post-break, and post-break examples. So what is a simultaneous break? It is what it sounds like it is. So if you know the definition of the word simultaneous, it's many things doing the same thing at the same time, basically. So it's when we have multiple stocks breaking in one direction, so breaking a 2 at the same time. And we can identify simultaneous breaks by index or by sector. What it says. When a simultaneous break occurs, it shows us or tells us that there is algorithmic activity. This means that the simultaneous break is the most definitive buy or sell signal that we have when trading. So we know that they're buying like all the gold stocks all at once when we have simultaneous breaks, for example, on many different gold stocks. It's obvious that they're buying gold or what have you, whatever sector. So we look for it on all 4 major time frames. We look for the 60, the day, the week, the month. as well as the quarter and the year, because we're always monitoring our higher time frames and continuity levels and what's in force. So a pre-break. To identify simultaneous breaks before they occur, we look for actionable signals. If we see a concentration of actionable signals in the same sector, we can identify the potential for a simultaneous break should all of those signals go in force. So here's an example. Let me shrink that a bit. I think this just happened last week, or this week.
No, this one was a while ago.
Oh, was it? Well, we had one this week with all the semis. So we can see here that we have 4 inside bar setups in the semiconductor sector. So we have AMAT, we have an inside day, LRCX, inside day, ADI, inside day, ON, inside day. So since we have all of these doing the same thing, we would expect if they go 2 up for them all to go 2 up at the same time. So we know we would want to be here. We'd want to be in the semis this day. As you can see, all 4 inside bars went in force and took out their magnitude. So inside and up, inside and up, inside and up, inside and up. So that is a perfect example of a simultaneous break on the semis. So everything doing the same thing at the same time on the same day. Simultaneous break. Post break. Identifying signals post break is as simple as scanning for signals in force. This is best done with higher time frame signals, as you will have more time to gain entry and a larger magnitude to target, because you don't really want to be identifying them on like a 15-minute chart. You're gonna drive yourself crazy. So here's our Strat scanner. So using app.stratalerts.com, we can scan for higher time frame signals in force, and we can then sort them by sector to identify where we see the most stocks in one sector breaking at the same time. So where we see the most amount of 2s, because we're always saying we want to trade in the direction of the most 2s and 2s going 3, and this is a tool that can help you identify that. So we can see on 5/2/24 that the utility sector is simultaneously breaking 2 up. So these are all utility sector stocks, and they're all currently, you can, maybe you can't, maybe it's too small. You can currently see the current candle is, they're all 2 ups. So we know that utilities, they're buying utilities. And then with this knowledge, so if we know that the day is in force, then we just know, hey, we didn't get the initial break, but we can still look for lower time frame actionable signals to reconfirm the 2 up day break. So
this is a quarter.
Oh, sorry. Point still the same though. Like, still we can reconfirm looking for lower time frame actionable signals. There can also be simultaneous breaks based on what the company does or where the company is from. And Rob and we refer to these as story stocks, or like a market theme. So for example, during COVID, vaccine companies like Moderna, Novavax, work from home companies like Zoom. If you weren't here, you wouldn't know why that's funny, but they tanked. This month or last month, we see China stocks all breaking regardless of the sector 2-2 month. So again, sector specific, like all the Chinese stocks, Baba, Baidu, what is PDD? I don't even know what they all are, but so this type of simultaneous break will require ticker knowledge to identify. And then this is just something that comes with time and experience in the market and just being around for a while and understanding in listening in the chat and watching us talk about utilities, industrials, China, vaccines, like it's just going to take a little time because there are so many stocks. And then this is for Thinkorswim. You can add the sector and sub-industry tab to your watch list column, which this can help you also identify what tickers are in what sector or sub-industry. So for example, each day we monitor the inside days. Alex will look at his inside bar up and down scans during the morning to identify sector specific simultaneous breaks. So again, like semis, China stocks, what have you. And then Alex, this is where you're up. So I'm going to disconnect my Discord screen. Okay, I'm gonna hit the stop streaming button.
So I don't know if the stream has started yet on YouTube, but when it comes to scanning and stuff, we will dive in and I'll show you guys a Strat site. You guys can ask me questions and whatnot at the end of this. So we'll show you guys how you can scan for specifically inside bars, hammer shooters, rev strats, all that fun stuff. So don't worry about that. And with Thinkorswim, we can also show those who use Thinkorswim how to do that as well. So don't worry too much about the execution of it quite yet, but just understanding that we can scan for our signals is very important. If we're good on YouTube, then we're good to go. Doesn't look like it's good yet. So 8-ball trades, we're getting into universes. Your questions will be answered here. Good on YouTube? Good. All right. And FYI, those on YouTube, if it does cut out, refresh your page. It will get you right back into it. So the next section is universes. And when it comes to universes, we want to know first what they are. So here's the contents. We'll get into it. So a universe is what you plan on trading. So this is your trade plan. And we have different types of universes. And much like an actual universe, like the one we live in, the possibilities are completely endless. And because of this, new traders must choose one and stick to it. And you have to learn it inside and out. And once you're proficient, you can then create positions in one universe and then go to another universe and create positions there as well. So the strat will customize itself to you with the universes. And the other thing is once you get good at one, which we're going to specifically hone in on one for you guys to practice on, then you can broaden your basis. So once you know how to trade a T2 reversal, you can do that across the week, the month, the day, the quarter, as the same way you do it on a 30 or 60 chart. So possibilities are completely endless here. So to start, what we suggest new traders start on is the 30-60 gap list. So trading 30 and 60 inside bars and 2-2 reversals on the gap list. And this universe gets updated daily with new gapping stocks. And this also does not mean you cannot look at them the day after or the weeks after if there is higher time frame signals in force or big continuity, but it will be updated daily with new stocks. The reason we suggest starting here is because when they move very, very big. And when they don't, your stop loss keeps you out of the trouble. So not every day will the Gapper universe just roll out the money for you, but on the few days that it does, if you hold your winning positions, you'll make a lot. And it's so important to start here, in my opinion, because you can practice your tight stops. It's also an intraday universe where you're trading the 30-60s. So you trade it each day and you're getting signals every 30 and 60 minutes to look at. And it'll get you super used to trading with potential threes, which we'll talk about, and a lot of other the strat concepts that are super important. So once you are proficient on creating winning positions on the gap list, you can then add the other universes, such as an intraday 60-minute simultaneous break on indexes. So we can create positions in one and then look at a second or third to continue to look for new setups and new positions. And this is just a small intro. We're going to expand on that. So these are all the universes that there are, and it's not like this is every sector, but you're going to see the nightly vid, or we can just call this daily actionable signals each day. you're going to have new daily actionable signals. So if you're someone who likes to jump around each day and get to new signals and stuff, every day you get new signals. There's also the weekend vid or weekly actionable signals. Each week you'll change your stock list. So if you're just trading weekly actionable signals, each week your list changes. And then the macro vid is the quarter and the yearly signals for people who are on the longer time frames or just like confirming higher time frame signals in force. That's also another universe. And then Strat Attack is another one where on Tuesday nights, we'll get into it, but on Tuesday night we're looking at signals that are following through Monday and Tuesday, which we have a few examples of that this week. And then sector specific. So if you're just someone who wants to trade the technology sector, which is the XLK, or you can also do the semiconductors and the Qs, you can just do just that sector. And you can also do index specific. So since a lot of people don't have a million screens or they don't have the bandwidth to track like all of 500 stocks in the S&P 500 or all of the 100 stocks in NASDAQ, you can start with the Dow Jones. It's only 30 stocks and it makes your nightly prep really simple. Every night or week or month, whatever you're doing, go through the 30 stocks and you can look for what you look for. So this is a list and then we're going to get into those. So the first one is the Gapper universe. Here's our contents. Don't quite need it. So the Gapper universe is the starting point, and the goal is to trade 30-60 reversals with tight stops, creating winning positions on volatile names. So the best resource for gappers is earnings gaps because these occur on ER release, which is a pre-planned date. So you know it's going to happen. And the best resource for finding these is earningswhisper.com/calendar. It'll show you all the earnings releases. Unplanned news releases will also cause gaps. So during pre-market trading, we can scan for who's gapping up and who's gapping down. I specifically use Thinkorswim, although there's things like FinViz, I believe, which will also allow you to do that. And other platforms have similar gap scanners and whatnot. But these links in here, they have to be updated. For some reason, when the Schwab transfer occurred, these links broke. So I'll try my best to get that in there tonight. And as far as gaps are concerned, there's no secret for knowing which earnings gap or news gap is going to go and which is not. Some days are really great, and other days you're going to have to stop out, and that's just how it is. So specifically what we can look for. So you're going to have a gap. It's going to be up or down, and it's normally occurring on news. So everyone wants to expect gap up and it just rips to the highs, right? But you need a specific condition for that to occur. So for an example of a gap up and go or gap and continue, we must be trading back through a previous range. There is no messing about if this gaps into new highs and trying to expect it to go. We need it back through previous range. And in this case, what you'll see is as price starts taking out the previous range pivots, it will speed up. And this all happened within the first hour of the day. And it ran, I think, with 30%. And this is because you're stopping out any shorts who have been short on good news. So what is occurring is the buyers are taking the offer, the shorts are all getting stopped out. And you can see you finish the broad information. New lows, new highs. So a culmination of a lot of different things we've talked about. And this works both ways, both up and down. And then the kicking pattern, which we have covered, but we're going to recover it here because this is something that's very important. If you're a gapper trader and you wanted a specific thing to look for, kicking patterns. You don't get it every day, but when you do get them, they're pretty much instant. And that's what we want. So the kicker is a 2-2 reversal. And like we had already covered, we want it to be a bright green candle countered by a gap in the opposite direction, or a bright red candle countered by a gap in the opposite direction. So in this scenario, we can expect the gap down to try and continue when all of these guys long yesterday are trapped. And then vice versa. We can expect this gap up to continue because all of these shorts yesterday are trapped. This also occurs on weekly and monthly candles, just not quite as often. So you'll most often see this on a daily basis. And as far as stops and stuff are concerned, the second this is red on the day, we can either look for additional 1-minute signals to confirm that to manage our risk, or we can go short with the stop at high day, right when it's red. So off the open, we can be there right away at the open. You will have to be aware that it's very quick in the morning. So ideally, getting onto the 1 minute and stuff will at least allow you to manage your position better and enter on a signal break instead of just right at the open. But at the open is also a good time to play these. So for example, we can see cost on the daily. They close up at the highs, kicking pattern, and back through previous range. So you have the simultaneous kicker plus all these longs in here have to get out. So you can see they kick them out. Boom. And notice they open at the highs, go red. We want to be short all day. And then it closes out at the lows, and that kicker has completed. It's a one-day pattern where this is in force. Marvel is another example. Notice they're up at the highs, closing up higher. Then earnings occurred. Right here, kicking pattern. When that's green to red, we want to be short, back through previous range. And this is all coming from the gapper universe. So if I had to pick one thing trading gappers to just only trade one setup, it would be these, because they just work so damn well. We can also take a look at a bullish one, J&J on the daily. Notice they open at the highs, go out on the lows. And then it goes green and in force above the open, takes out the other side of the daily range. And in this case, notice they draw down first, and then they go green. So this is where you have lower time frame setups in here that allow you to get in and renegate the day to an in-force kicking pattern. Elaine is our gapper girl, so if you have any questions about that type of stuff, I imagine she would be glad to answer those. A kicker, when we're talking about gaps, what's relevant is the daily continuity. And the reason the day continuity is relevant is because a news release has occurred, which simultaneously changes the perception of all the participation groups across all time frames that day, right there. Because let's say J&J does this, and then overnight their ER releases, and they just blew out earnings. They absolutely killed it. They doubled their earnings per share. At that point, if you're a yearly group or a monthly group or a daily or a weekly group, everyone's thinking buy because that was good news, right? So notice it would change everyone's perception right at this open. So that's why the gaps, we suggest them because you're watching the day as well as the week and the month for magnitudes, but the day and the 60 and the 30 intraday, those are the three major time frames you're watching. So now with gappers, we have a rule, and the rule is that gap ups are made for selling, gap downs are made for buying. And the reason is because what we know about the broad information. So when we're performing a gap down buy or gap up sell, we need to see a specific condition. So in this case, gap down buys, they're best performed from exhaustion risk. These are the gaps we do not want to be shorting in the same direction as the gap. Because notice, there is no kicking pattern. There is no previous range to come back through. It's opening at new lows. So at that point, you can then see when this goes gap down in green on the day, back into this range, reclaiming the lows, we're looking for the 3 on the day. And notice how the magnitude of that is gigantic, right? The 1-3 rev strat, the magnitude's way up there. So any 30-60 signals down in here is something we're looking for to cause that 3 to occur. And as far as then entering, when we are looking at gapping setups, we want the 30-60s. So on a gap down buy, what you're looking for is a 2-2 reversal back up on the 30 or 60 minutes. And then once you're good at that and you are good with the gappers and identifying what's occurring, you can then drop time frames. Because the 1, 3, 5, 15, you just have less time to identify it. So the 1 minute, you get 1 minute before that signal goes in force to identify it. So once you're good at this and you can see it really quick, then you can try and play these lower time frames. But you'll see here on the J&J, or what was it? I believe this was J&J. Forgive me if I'm wrong. But they gap down, or no, this was McDonald's. Gap down. They go green in here, potential 3-day. 2-2 reversal on the 30 minute right there at 271.79 we can buy. And then we have the magnitude of the daily, the 1-3 on the day, magnitude at 276.13. So we can buy it here, exit here. And with our stops, like we said when learning, we want you with tight stops. So ideally, the spread plus a penny, maybe you have to enter it a few times. If you're going to go wider though, you have to be very aware of that. You're risking more money and you are going to lose more if you are doing this incorrectly. Once you are good at this, identifying the 2-2-30 on the gap down for the potential outside day, you can then get in there on the lower time frames. You'll see the 5 minute 2-2 reversal, then they go 2-2-1-2. They go 2 down, but you get to hold it because the day is bright green. At that point, the daily continuity, this fiver is not changing the daily continuity. So you can break even your stop and sit there and let it do its thing. And then you'll see they go 2-2, 1-3, 2, which occurs with the 30. They also have the 2-2-2 hammer fiver in here, momentum hammer fiver in here, and then they take out their magnitude. Gap up sells, also preferred from exhaustion. So what we can see is they bought yesterday. When they buy yesterday, this is why we want to sell, because if they bought yesterday and it gaps up and then goes red, what just changed? Well, anyone yesterday long and looking at this gap up, it was bright green at first, right? They're like, oh yeah, rubbing their hands together, making all this money. Once it flips red here, that gap starts evaporating, and anyone long yesterday starts to sell to close. Simultaneously, we're failing one side of the range. We're going to target the outside day and the other side of the range. So they gap up, they initially go higher and then flip a red. And then at that point, that's a potential outside day. Failed 2 going 3, and then boom. From exhaustion risk, super important. So what you're going to see here is on the 60 basis. That occurs up in here in the morning. There is the 2-2 reversal 60 in here, which is a potential entry. At that point, the entry would have stopped you out break even, which is fine. And then the rev strat here, 1, 2 up, shooter. At that point, when that goes in force, since it's gapping on news and we know it's volatile, there's really not much of a reason that shouldn't work. We should take out this, this, and this. And then that gets you in and they puke. So you can see they get absolutely murdered in there. And that's because our actionable signal causes that to occur. Anyone that tried to buy in here, they have to get out while the daily group and 60 groups are selling. And you'll see it goes 981 to 954. So lower time frames on the gappers. These are best used in the first 1 to 2 hours of the day when volatility is high. And we don't suggest this for new traders because volatility is high and you're trading on like a 5-minute, 15-minute basis. You have to be a little quicker. So when volatility decreases, the lower time frames will chop you up. So what you can see is in the morning, extremely volatile. In the afternoon, there's still some good setups in here, but notice they chop them up in here. So if you trade 2-2 down, fail, right, against the daily continuity. 2-2 up, does not work. Hammer, does not work. 2 go 3, then 3-1, they break up, does not work. And this is because we're getting stuck inside. You can see they fail to take high a day out. They're stuck inside of this range. So in the morning, when they're 2-in and really going, good. Once it gets into the afternoon, you need to be watching the 30-60s. So if you sit on a 5-minute chart during the day and that's all you look at, you will get chopped up. We must use these all in alignment. And you can see in this case, they rally it hard in the morning, set up a hammer 15 with the bright green day, then 2-2-15 reversal, boom. Then you can see another 15 reversal and then boom, off to the races. So let that continuity set up bright green and then look to confirm it. So when it comes to the gapper universe, there's some common mistakes. Trading the lower time frames and being sucked into the intraday vortex, as Rob would say. And the solution to this is focus on the 30-60. And the other solution is if the daily time frame is not obviously buy or sell, probably is not going anywhere. So if you're looking at a daily chart, and let's say your daily chart looks like this, where it's just a complete doji in here, doing nothing, you don't have to do anything, right? It's doing nothing. Whereas if the day looks like this, bright green to start the day, they're doing something, right? They're buying in there. You can go in there and start playing because the buyers are aggressive. That's what the bright green tells you. Buyers are aggressive. And vice versa. If it's bright red on the day, you know the sellers are aggressive. And that's what we're looking for. So the second thing is trading a mother bar. The solution is to make sure the 30-60 is not stuck inside when you create positions. So for example, if we scroll back up here, if you're in here and you're trying to take the inside 60 break higher, what you're doing is you're buying nowhere near taking out the morning highs. So you'll see these two 60s are stuck inside of the first two, combining what we can see, right? So this is a 60 chart. The first two 60s trade lower. These two 60s go stuck inside. If you're trading the inside up break in here, although you can try it, right? If you wanted to try and negate that, it's probably not going to work because you're nowhere near exiting the first 2 hours of the day. So we prefer the break back through the range with the rev strat. And that'd be an example of the mother bar where let's say you're trading in here on the inside 60 that's forming. If you're trading during this one on the 5, 15, 30 minute, you're getting killed. There's nothing we want to do in there. So the other thing is exiting early. A lot of people will take gap bursts like the kicking pattern. And once it gets going and goes really good in their favor super quick, they'll get out. And that is the opposite of what we look to do. If it's really going we want to stay in as long as possible because that means it's working. And this is the main thing most traders struggle with, is getting out much too early. So to solve this, you don't want to exit unless you have a reversal against your position. And even with a reversal against, if you're deeply in profit, you technically don't have to do anything. So one thing some people will do is they'll get on in the morning. If it's like kicking patterns or any gap up sell candidates or gap down buy candidates, they will buy the 15, 30 reversals, 60 reversals. If that works, they will go break even and then set their take profit levels at outside day or outside week, whatever we're targeting. And then they will come back later in the day. They just trade in the morning, make the position, and leave. And what that allows you to do is come back later in the day. Either you made a lot of money or it didn't work and you get stopped out. So it makes it binary, where you either make a ton or you have the winning position that stops you out, so be it. And making trading like that is extremely important. So another thing people will struggle with, the second 60 of the day decoupling, because we had learned the day and 60 opens are the same the first 60. So what occurs on the second 60 is the decoupling, where they separate the opens and we gain information. So what that means is the second 60 will either confirm or negate that initial move, as we've talked about already. It's the same thing as confirming or negating Monday's move on a Tuesday, just on a 60-minute. So let's say the second 60 goes inside the morning range. Any of your lower time frame trades within that first 60 of the day, you would want to reduce or partial. At the worst, you would close the position. Because once that second 60 does not follow through with whatever the morning move was doing, now you have to see where that inside bar on the 60 goes. If it's very bright green or bright red when that occurs, you can keep open positions, but you have to be extremely aware that the second 60 is not confirming what you know to be true. The fifth thing is lack of patience, and this is solved by checking the chart at the correct times. So if you're a 60 gapper trader, a 30 gapper trader, or both, ideally, what you want to do is check the charts 10 minutes before the new 60 open, identifying actionable signals. Because if it's a 60 inside bar, that's going to take us 60 minutes to set up. So if you look at it 10 minutes before the new 60, you will see that signal forming, and you'll know exactly what you're meant to do based on your continuity, and if it's a gap sell or gap buy or kicking pattern, whatever it may be. The other thing is you can check 10 minutes before the new 30 opens at 9:50, 10:50, etc. And in between those times, you don't have to do anything. You can go walk your dog, you can make breakfast, you can do whatever you'd like. And this is why the Gapper universe is also great, because we really just want to participate when the 30 and 60 signals are confirming each other. So if you have, like we had talked about with the scanning, we want multiple signals in force, right? So if we're checking the charts at 9:20 and we see a 60 inside bar, we can then drop timeframes. Go look at the 30. If the 30 is a hammer rev strat with the 60 inside bar, you can grab the 30 to trigger the 60 and add on the 60 break, 2 positions. And then if that signal works, break even your stop, go do something else. So do something else in between. You don't have to stare at the charts once you have that break even stop in place. The other thing here is patience. So since we know what a good setup looks like, an actionable signal, right? It's important to know how long they take to form. And inside 60 technically takes 2 hours to set up, because you have the 2 and then the 1 on a gapper trade. You're not going to have an inside 60 at the open because it's opening as a 2 on the day. The 1-2-2 rev strat takes 3 hours to set up. And then a 2-2-60 takes 1 hour to set up. So you can see the rev strats and inside bars, you get much more time to identify those as they are forming. And if you are then patient in waiting for these setups to form, you will have a much better chance of making winning positions. It is also important to be willing to stop out and re-enter the same signal. So for example, if a 60 signal triggers and then fails and then re-triggers again 10 minutes later with 50 minutes left on the 60 signal, and your analysis on the higher time frame is still true, maybe you still have full time frame continuity, maybe it's still a kicking pattern, or it's a gap down buy, it's not an outside day yet, etc., etc. You have 50 minutes of that signal to try again. So you must be willing to re-enter, especially with tight stops. You may have to re-enter a signal more than once, more than twice, maybe 3 times. So once the first 2 hours of the day have traded, it's unlikely daily continuity will change. Thus, we have a lot of information on price direction. And a lot of people say like the last hour of the day is the most important, specifically in the stock trading space. They all call it power hour, right? Or the last hour of the day is super, super important for tomorrow, but it's not. What's more important is those daily opens. How far away are we from those? Because that tells you how aggressive the buyers or sellers are today. And then each setup intraday, when this 2-2 occurs in here, you're going to see the day opens way down there. So they're really aggressive. And then you get the up sideways, you can see in here for an hour. And then 2-2-30, measured move of that morning move. So really aggressive buying, and then again, really aggressive buying. And then you have the 30 against to exit on the reversal. Or hold break even, depending on what you're looking to do here. So in the afternoon, we want 30-60 signals after corrective activity, bright green or bright red gapper names. We don't want to mess about with things that are dojis on the day because they're doing nothing. So as we'd already shown, bright green and then additional signal. This occurs well into the afternoon because this is 1, 2, 3 hours into the day right here. So you can see we have a red bar where sellers are selling on the intraday basis. The 60 or the daily continuity does not change. Then we get our actionable signal. So you have the corrective activity plus a reversal back up. Anyone short in this stuff has to cover, and that's what occurs. And then you can see they have the reversal against up in here. So that covers the gapper universe. I'm sure we'll have more questions as we get that going intraday and stuff, but that covers most of what we're looking for. So if you have questions, hold those to the end and we will do our best to get to those. Now, the day, week, month, quarter, year signal universes. So when we say like a nightly video, the daily signal is pretty much what we're looking at. If it's a weekend video, it's the weekly signal. If it's a monthly or a macro video, we're looking at the month, the quarter, and the year signals. So all of these are separate universes. And depending on the person, you can change what you're watching each day or each week or each month, each quarter, each year. And if you're someone who wants to stay on one thing, like you really like NVIDIA or something, you can stay on that all year, right? So that can be your universe. Maybe it's just things very bright green or et cetera, et cetera. Again, it's infinite. In this case, we're talking about actionable signals. So how would you do this? Each night, you can scan for new daily actionable signals. Each weekend, you can scan for new weekly actionable signals. Each month, monthly, quarterly, et cetera, et cetera, et cetera. So depending on the type of trader you are, you'll find you either enjoy the short-term stuff or the longer-term stuff more. And the really important concept here, when the shorter-term lists align with the longer-term lists, we say this reconfirms what we know to be true on the longer time frame, confirming that trade through multiple time frames. So when we're looking at like a nightly vid list, like a daily actionable signals, what we're looking for is give me daily signals on the things that are in the monthly, quarterly, yearly macro video or monthly, quarterly, yearly actionable signal in force lists, because that would reconfirm what we already know. And if it's across all of these universe, you'd have a signal from the year all the way to the day. So the more universe that stock is on, the better. And that's just saying however many actionable signals you got. So another thing people will do with this is trading one type of signal. So like we already said, some people trade just the rev strat. And we already said with continuity, we don't have any reason to believe it should fail. Since you're countering an equilibrium break, we know for a fact people are at a loss. And that's based on what we know to be true at the point of entry when that triggers. So thus, you can choose to trade the 1-2-2 on whatever time frame you choose. So if you're in this universe, we would like to add evidence confirming signals through simultaneous breaks, taking multiple stocks with the same signal in the same simultaneous break. And then what you can do is add to and hold the signals that don't reverse. And then the ones that reverse, get out of. So for example, we actually don't have this one in here. I'm going to pull up a trading view chart here. The utility trade. This is something we were extremely adamant about on my YouTube channel on the nightly and weekend video stuff. We got XLU. So this is the weekly, nightly video list. Notice, or weekend vid. Notice the 3-2-2 hammer. That's something we look for. And then we do our multiple time frame analysis after identifying that signal. If we go to the quarter and the year has a hammer inside bar, actionable signal. The year could become the 2-2 reversal up, which it did not stay in force, but it did. And then the month would be negated into full time from continuity and trigger the quarter and attempt to trigger the year. So when this weekly is occurring on XLU, we can then go into its holdings and we could say, well, SO, you can see it's a 3, but it's in the XLU ETF. This is something we're looking for, because if it goes 3-2 expansion, what's happening to this range? The broadening formation is expanding. And like we said, most people are scared to do that. But since we know this occurs, and we know we have a simultaneous break where all the utilities are doing it, we can do that right there. And your weekly stop is this. Maybe you enter it once or twice, but you can see 52 cents, very small. Now, once that gets going in here, you do not have to get out unless it hits your break-even stop. You can hold it until it reverses. So they go up for 4 weeks, and then the 3 in here, that's when you can start taking your money. If we go to duck in the utilities, you'll see a very similar thing. 3, 2. Similarly, you can see it does not expand instantly, but it does not reverse. 2, 2, 2, 3. If we go to NEE, at this same exact moment, this has the hammer counter shooter week. So you can notice this goes 1, 2, 3, 4, inside bar, 5 weeks. So while the other ones reverse, you'd exit those. When this inside week goes in force, you can add to it. And then if you do ads in here, you have to be extremely aware when this next week opens, because if that changes what you know, you'd have to reduce it again. But for example, this is what we want, right? It goes all the way up, and then we get additional signals if that's going to keep gunning. And when they really get going, they really get going. Promise you that. And those are all utilities, all simultaneously breaking at the same time. So we want to trade all of those breaks, as many of those stocks as we can, hold the winners, cut the losers. And if we go to like AEE, for example, let's see. Let me make sure that we got this in the right thing. So this is Monday, the 15th of April. AEE is a utility in here. Notice Monday, 15th of April, maybe you buy it and you hold it. And then it goes 2 down. Get out of that. Go to the ones that are working and add. Because what's going to happen is a lot of people want to hold things even though they're doing nothing. What we want is this long green bar stuff. So once this is gunning, we can add using additional signals, which you're going to see on, if you go to the daily, it's the simplest here. Whenever you get the daily here, the Momo hammer here, the daily Momo hammer here, all of this stuff can be added on. And since we started the position down here, we actually had the 2-2 day, Momo hammer here, the weekend here, and then we didn't quite add into this stuff. We just held. At least that's what we were saying across all the vids. So when this goes in force, that'd be the 4th way in after what we had done before. And this is that example we had covered previously with the broad information and using the signal to create the weekly signal. So this, and then the rest, right? Let's get back to the slides. So with this universe, again, simultaneous breaks, that's how we add evidence. If we're just trading a weekly hammer or something, the more hammers or the more inside week signals we have when that occurs in the same sector, the more evidence you have. So you can take multiple setups and you can widen your stops based on the basis that it should work, as we have no reason to believe it should not. So reconfirming. Daily signals are reconfirmed by 30/60 signals. Weekly signals are reconfirmed by daily and intraday signals. Monthly signals are reconfirmed by weekly, daily, and intraday signals, and so on. So when we're looking to reconfirm signals in force across these universes of the month, week, quarter, day signals in force, we want to do this at corrective activity, like we'd already covered in the gapper section. And when we're looking at inside bar continuation specifically, we call these inside bar adds to currently held winning positions. So it's best not to enter on continuations. As we had already covered, continuations have less likelihood of working out. So once you have a winning position, when an inside bar forms, since it's already winning and you already have their money, you've already taken it, when that inside bar add triggers, you can do whatever you like. You can add a lot, you can add a little, or you can just hold it. It's up to you. And what Rob would always say, and we've said this before, once you have a winning position, the casino's open. You can do whatever you want. We will talk about that. So just hold up. That's going to be Friday. But now Strat Attack, another universe. So the Strat Attack universe is looking for 2 up, 2 up. And this is, for some reason, I'm unsure what's going on in here. Should not say reversals. But looking for 2 up daily to start the week, coupled with magnitude on the higher time frame charts. Or 2 down, 2 down. So 2s reconfirming Monday and Tuesday. So for example, CEG, this is in the utility sector. So what we want to see is they confirm Monday's direction. And what you'll see here, CEG goes 2 up on the month and then 2 up again on Tuesday. And they bought so what this means is they bought Monday, came back to buy more on Tuesday. Since we know the algorithms and the traders, how that works, when we're picking up on this, what we're picking up on is institutional traders going in there and they have shares to fill. So when we say they're taking the offer full time from continuity, what that means is at that point they are taking the offer. We have full time from continuity. This is a way of picking up on that. So you can see they go 2 up here on Monday, 2 up on Tuesday, and then come Wednesday, they continue to buy. So they bought Monday, came back again to buy more, and then again to buy more. And this is why we want to add to winning positions or at least hold them. Because the more often your position reconfirms, the more likely it actually is to continue than it is to reverse, given that we know green bars get greener and red gets redder. So you can see come Wednesday, we can make the assumption they will continue in the direction of Monday and Tuesday. And using what we've learned so far, we can gain entries. So once you know the gapper universe, you can take the gap down buy in here, right when that's green and reclaiming the 2 in here. That's a 2 going 3. You can do that. And then if you're a 30-60 guy, you can then play the 1, 2, 2 hammer rev strat 60 and do that as well. So hopefully you can see how that starts commingling with the other universes, where the gapper universe is teaching you the skills to play this stuff, and then the rev strats, actionable signals, all that stuff teaches you how to get this stuff. Another way to use this universe is look for higher time frame signals in force during Monday's trading, using that Monday day to gain entry on Monday in the leaders. And then you can add to the ones that reconfirm Tuesday and cut the ones that go 2-2 reversal. And the reason we would like to do it like this is because we like to say this: the market tells you the winners. You do not tell the market the winners. So whichever signals do not reverse will be winners, period, because they're still going up. You want to exit when they reverse and you want to add when they continue. Because if you add to the winners, once you get the really big move like that utility move, you can make your whole year in one trade. So for example, what we can see in Starbucks here, in order to see a downtrend all week, you need back-to-back 2s to start the week. So we can see they go 2-2 on Monday. This was a position I actually took on this Monday here, which is why it's an example. They go 2 down again Tuesday here, selling more. So when that broke 2 down, I added to my position. This is breaking a weekly signal. And then that tells us, since they went down Monday and Tuesday, we have a high likelihood they'll go down Wednesday, Thursday, Friday. And they go Wednesday, Thursday, Friday, boom, the whole week sells. You will not find this type of action unless they sell Monday, Tuesday first. Another way of identifying this is, let's say you go actionable signal Monday and then trigger on Tuesday. You can get the last 4 days of that to get going. So on the most common setup in this universe is going to be the momentum hammer used to gain entry into a strong trend. So you'll see these forming Monday and Tuesday. Since we identify this universe after Tuesday's trading, what we're looking at is Tuesday's candle, and we want to see, is that a momentum hammer or is it slightly corrective activity? Red against the day, the week, the month, quarter, year, all that green. So when this goes momentum hammer on NEE, another utility name, as you can see, they bought Monday, Tuesday. So we can go in with the expectation they'll try and buy again Wednesday, since they obviously have more than just a day's worth of orders to fill. They're taking the offer. When this goes momentum hammer enforced on Wednesday, we can then buy it there. And then look for Thursday, Friday, keep going. So before we get into it, questions. So how do you take volatility in IV into account with premium pricing on gaps? So actually, IV drops the day we go in and trade. Because it has already gapped, the IV will be much lower than the previous day. So there's not specific levels or anything, but what we will take into account is how spready is that option, how much of a move is it pricing in. Because if we can gauge the magnitude of a 2 going 3 or the other side of the range with the broad information, we can then identify, is that option pricing in the move or not? So once we get to options, which we'll cover tomorrow, we'll talk a lot more about how we do that with the strat. And this is specific to me. Other people in the strat do this differently, and it's just the thing that I have kind of came up with over the past couple of years. But hopefully that answers your question a little bit. We'll get more to that tomorrow. So if you want to add to winning positions with options, are you rolling or extending them on new signals if you're not adding more capital? So with options, it's dependent on what you want to do, really. As far as adding goes, I would be adding into further out of the money options, because at that point, when you have the winning position, let's say you're up $800, for example, XLU. When this goes 2-2 day, we're actually looking specifically at SO and duck. So when duck goes 2-2 day in here, we're looking at the 90, I believe it was a 96 strike or 90, it was a 96 strike calls or 95 strike calls, one of the two. So let's just say it was 95. So when this goes up in here, 95, and then it's up into this 97, 98, those contracts, they're already doubled. So up like 1,000, right? So on additional signals in here, which in this case don't have the best ones in here, at least right up in this stuff, you had the gap down buy, which we did play. There's also the 2 going 3 in here, but then you get the 3-1-2 in here, which is really good. On this type of stuff, what I want to do is go out of the money, because at that point, we know they're taking the offer, and we have a lot of evidence. It's a simultaneous break. So I'm willing to go for higher strikes because we have more evidence and because that trade has already worked. So if we're up, let's say, when this triggers, it'd be up, it's up like $2,300-ish. When that occurs, I can take $1,300 and put it into like 104 calls or something. And if that hits, big gains. And if it doesn't, either I'm stopped out when this reverses against, which this did not, or I lost my train of thought, but either it hits or we stop out. And if we stop out, we risked their money that we had already taken. If it does not, and the continuity and the analysis is correct, then those go like 200-300%. So when it comes to adding, that's how I like to do it. A really good example of this was OIH. It was a 700%er in here. So you'll see this. Inside month and up, when we take that initial break, once this starts going into the first pivot of the pivot machine gun in here, we can then start grabbing higher strikes. I was looking at the 345s a couple weeks out, because at that point, if we're going up to 365, they're going to be worth $20 a piece intrinsic, which we'll get more to tomorrow. But down in here, they're worth dirt nothing. I think they're like less than $2. And they went to being worth like $8 in the money on expiration. So I had a question on the gappers. Are we entering when it reverses? Yep. You know what a reversal looks like. We just gave you the cheat sheet. You know exactly what a reversal looks like. So you enter when it reverses. So Emily, she has a question. She says, to be a successful strat trader, you must know all the signals. Different time frames are going to have different signals. It's rare that the same signals appear across different time frames. This is why we suggest starting with the gap list, because you can just trade inside 30-60s, just an inside bar, get really good at that. And then once you're good at that, you can then use that inside bar, go and trade the daily signal inside bar, and use that to trigger higher time frame signals, and et cetera, et cetera. So that's why we suggest really narrow it down to one specific thing. Like if you want to trade just rev strats, trade just rev strats, but do your analysis on the other time frames. The reason we want you doing that is because these scenarios, the 1s, 2s, and 3s, identify specific conditions. So if you get really good playing off an inside bar condition, either if it works or if it goes rev strat and fails, and being good at playing both of that, especially on like a monthly signal in this case, then you're really good at trading that inside bar condition. You can trade it across anything because it'll work the same way. And the reason I say it like that is because, for example, this is something we talked about during the day here. Qs goes inside bar up, right? Since I know this condition, we've been doing this a while, when that occurs, we're nowhere near taking these guys out on the gap. This is gap up and sell technically, right? So we're nowhere near taking these guys out. Like we said, chopped up trading stuck inside this morning range, that's one of the losing trades gappers will take. So during the stream intraday, when this is occurring, what I'm saying is if that comes back in, we have to either flip short or be out. There is no holding and messing about in here. So once we can then be good at the lower time frames, you'll then see it fails the equilibrium break, setting up the shooter 30 here. Where's the magnitude of that? To take you Rev Strat 60, 1-3. So we can short this to take that out, targeting low a day, right here, under that, 47631. And what you'll see, I don't want to dive too much into this, but what you'll see is when we say using penny stops, we'll obviously stop you out more often, but you will make money eventually. This is what we mean. When that goes 30 shooter and force, we don't have any reason to believe that shouldn't work. So it breaks and does not come back. But you don't need any other analysis to play that. And we call that pretty much the strat. You're just trading the strat, holding winning positions, getting out of losing positions, and playing what you see. So in this case, we had the 3-1-2-15. They broke up. And we actually mentioned you could take that long if you wanted, right? It goes 68 cents. You make a winning position. Once this 15 signal closes and we don't have it, and it reclaims this 3 here, this is why the reclaim is so important. Once it reclaims that, you either have to be short or out. Then the inside 15 triggers the 30. And then all these guys get out. So hopefully you can see, if you're just an inside bar trader, you can trade the inside 15 and the 60 breaks and the inside 15 here. Just the inside bars, nothing else. But let's get into the rest of this. So sector and index universe. And I'm losing my part. Yeah, I'll let you guys give me 1 minute here. I'm going to grab some water and I'll be right back. If you have any other questions, feel free to let me know. So it wasn't a question, but it was more of a statement. It's obvious in retrospect, difficult to see it in the heat of the moment, frustrating. That is why we want you guys, when it comes to the Gapper universe, and we'll talk a lot more about this as we get through the next couple of weeks, and we'll have some nightly meetings and whatnot. That's why it's very important to go into the gappers every day. Go at the end of the day, look at the 30-60s, ask yourself what you could have done. Because if you see it and you get it seared into your brain enough, when you see the broadening formations, such as the levels of reclaim, getting stuck inside the morning range, taking one side out, making the broadening formation, failing it, once you see that occur enough, you can see it happening before it happens. We were talking about that potentially failing before this 15 even closed. So we said you could take it up, but you have to take it back down if it fails. And if you get just one setup, the inside bar or the 2-2 reversal, and you just trade that, you will see it occur all the time because it's the only thing you're looking for. So similar to, like, if someone's like, well, how many red cars did you see today? And you'd be like, well, I saw none. You probably saw a red car, right? Now, if I tell you tomorrow, go and look for red cars, you'll pick out multiple dozens of red cars. It's what you tell yourself to look for that you'll see. So you have to do that, get good at seeing the thing, and then once you see it occurring in real time, after seeing it occur a million times afterwards, you can then relay what you already had seen onto what you're seeing, if that makes sense. So you will get what you're looking for. And that's why we suggest focus on one scenario, one setup, one universe. To start, get very good at one thing. Because if you're good at one thing and can make money one way, shape, or form, the rest, the world is your oyster. Because now you have their money, you can do whatever you want with it once you're a green trader. So super important. So now the sector and indexes universes. So this universe is specific to one sector or one index. And we look for confirming signals between these sectored index ETFs and the holdings, which we had already talked about with the simultaneous breaks. So the simplest universe here is the Dow Jones. You got 30 stocks. It makes scanning super simple. And you can also memorize all 30 stocks super quick. It's going to take you a week and you'll know every single one like the back of your hand. Some will also only choose to trade stocks in the Qs because you got higher volatility more often than not, which is like your Tesla, your Nvidia, your Meta, your Apple, that type of stuff. CMG, Costco, all of that. That's 100 stocks. So it's a little bit more advanced. Some other examples are the XLK tech sector, the SMH semiconductors, the S&P 100 or 500. There's also, I think, a 300, etc. And you can really go crazy with that. Like some people were just trading ARK stocks, which was me and Sarah. We were just trading ARK stocks all of, I believe it's 2021 after COVID, because ARK looked like this. You can see the yearly on ARK. That was a 3 continuation all year. So all the ARK stocks were going nuts. And like my favorite one in there was FSLY. You can see it's doing the same thing. It's part of the ARK stocks. That was the trend with COVID. And in here, look at this, right? So when you have really good continuity and everything's moving, inside week up, boom, explosion, and then the other way. And then you'll see your levels of reclaim. They get stuck inside, fail the highs, take the lows, and then expand the 3 and crater. So depends on the trader and also what the market's doing. So, and another example of this, we already kind of went over this, but and this is more of an intraday. So if you're an intraday guy, you can do this confirming and negating intraday as well. So in the morning, Dow Jones started as a 2 down and green, became a 3 on the day eventually. When it was 2 down and green, we were looking potential 3. So this tells us we can then trade stocks in the Dow Jones that are 2 up or 2 down and green. The 2 ups will be relative strength because the Dow Jones is a 2 down and green. Anything 2 up is going up. This is failing to go down. 2 different scenarios. So relative strength is just, we already talked about this, confirming strength between the index and the underlying. So in this case, in the morning, Dow Jones started as a 2 down on the 60, and it was green. So potential 2-2 on the gap down. Anything that went 3 on the 60-minute is stronger than the Dow Jones because it went 3, right? It was able to take out both sides of the previous range. It also shows the buyers were more aggressive on the things that went 3 to the upside. So for example, what you're going to see is JP Morgan. This is a Dow Jones stock. So we can take note that JPM, since it went 3 on the 60, is stronger than the Dow Jones. And using our gapper knowledge, we then look for our signals to gain entry. So you could have tried the 3-2, which does work, but then right here, actionable signal, which is preferred. Notice you get the corrective 2 down, and then your entry occurs here, and they go flying because of the relative strength, identifying where those buyers truly are. So that's an example of just intraday relative strength. But this can be done across all time frames. So what we were just looking at, like we had already covered, you can do this on the week, the month, the quarter, and the year, and it works on all time frames. It'll work the same way. So for example, this was, I want to say this was last month. Yes. So last month, Dow Jones was an inside bar in green on the month. So what do we want to go after? Most people will go and buy the Dow Jones saying it's bright green. I want to buy it. But what you want to do is go after the things actionable signal in force on the month, because that's where whoever shorted last month is not getting what they want. So Goldman Sachs went Momo Hammer month up in here. And you can see this was relatively early in the month. When that was posted, it was trading like 444. This traded up another like $25 after that screenshot was taken. So all month, any reconfirming signal in Goldman Sachs is stronger than Dow Jones. And what you'll see is if we go into the daily chart in there, you don't have to be that first one in on the monthly break, but you can reconfirm any of this stuff, which the 3-2 day expansion or the 2-2 day expansion. And then you get the reversal in here 3, and then there's a change in your monthly continuity, which occurred after some profit taking. You'll see here if we go to the week. So they go 2, 2, 2, 2 up red profit taking at the end of the month, and then 2, 2 inside month this month. So notice they go up, change in continuity changes what we know. but just one example of identifying that relative strength, trading the twos. A lot of people go to trade the ones, you want to trade the twos. So the inside bar, when price is trading directionally up or down, the inside bars confirm or negate the direction, which we had already kind of covered. But, looks like this example is actually, yeah, so I apologize. The example is not there. But, like, for example, you'll see SPY goes 3 on the day on Tuesday. On the Tuesday night nightly video, we had SMH as the inside bar day. Why? Because if that goes inside and up, which it did, that confirms the direction of the rest of the indexes. What this inside bar on SMH also confirms is all the things like ARM, which was going up on Tuesday, 3-2. So when that inside bar up occurs on SMH, confirms what ARM's doing, and they go flying, as they were already going up. And AMAT as well, you can see there's your momentum hammer on Tuesday. And they go up again. They had the gap down buy this morning, which we mentioned, occurring on the oneers, which was a little crazy this morning. Not everyone's going to do that, but for example, and now we have, looks like inside day for tomorrow, right? You'll then see things like LRCX, 3-1 Tuesday, inside up with the semis. All of that is simultaneous break yesterday. And then they reconfirm that going 2 up again today. So all those inside bars either confirm or negate what we already know. So when those break, you have more evidence just because you already know what's going on as the week is going through that. So when it comes to the indexes, this is going to be a dated list, but it does give you at least a little bit of a start on identifying sectors and indexes in here. What we didn't cover is like, how do you choose which one you're going to do? Depending on what type of trader you are, if you want things that are like really quick, really going, that's going to be more of the cues and type of stuff. If you want the things that kind of just grind in one direction and a little bit more tame, that's more of your Dow Jones type stuff. And the gap list is also going to be obviously one of the universes where things are normally moving a good bit better. So hopefully that gives you at least a little bit of information. The other part is what I do personally is I change my universes based on where the signals are in force. So this week, all the technologies had the inside week up in force. So what we were talking about was like Apple, right? And we were talking about a lot of the semis in the technology sector. QCOM we didn't talk about too much, but LRCX, specifically ARM, was really going in that stuff. So kind of just moving along based on where those monthly signals change each month, where that continuity is what I'm doing. And normally it ends up being around like the Qs and the XLK and the SMH and that type of stuff. And then I'm normally monitoring the gap list. So this in here, you'll be able to download this. Again, it's dated. So what I suggest you do if you're going to try and get acquainted with this stuff, this was the link that was earlier in the slideshow, sector, selector, and spider. You're going to see in here, this allows you to, first of all, track the sectors. So you can see like today, technologies, that's where you want to be if you're a buyer. That was greener to start. And if you're a seller, the industrials and the communication services look to be having some problems, and the energies have some problems, right? So you can track the sectors that way during the day. These are live updated during the day, I believe. But you can also then go in there and you can say, well, okay, the tech. In the technologies, you're going to see this is the holdings. So you can see, go in there, AVGO, big gap up, which is most responsible for that big move in tech today to the upside on the gap. But you see AVGO just big gap up. So that's where the gapper is. In this scenario, notice mother bar. This is where you get killed if you don't understand, stuck inside of this. So we didn't talk about this all day because it didn't do anything. But you'll then also see like NVIDIA's in there, QCOM's in there, Oracle's in there, Adobe's in there, etc. So the tech sector, XLK, has semiconductors as well as tech companies. And you can then start going through these. And as far as volatility goes, the tech sector is kind of where to be. So if you're going to practice this stuff, you can go in there and go through these each night and take a look and confirm and negate against the XLK and the Qs. And that's one universe. And again, it can get as wide as you would like to make it be. So if there's any questions, feel free to ask them here. But the last thing I wanted to go over was the scan site, because it's pretty cool. And we've been doing some maintenance on it, have a few problems with it. Some things like the 1.3s, I believe, are still not working, so we're still trying to fix that. But now, as far as the scan site, what does your night look like as a stratter? So in the scan site, sadly, we cannot sort by the index yet. I believe that's one of the things at the top of the list. I'm not 100% sure. I'll have to talk to Tom, but we can sort by sectors. So if we're scanning in the tech sector, we can then choose our time frame. So this week, we can go and say, well, where are all the inside weeks? The 1x1 or x1x. This is any inside week. Where are they all enforced this week in the tech? And then filter. And you'll see these are all the inside weeks that have broken. And some are up, some are down. Most of them, or the vast majority, are to the upside this week. So then we can go in there. That's how we confirm and negate each week. You can scan this even on Monday, and you can filter on Monday and see who's going in force to start the week. It's another way to do it. But we can scan the in-force signals. You can also do so on the month. So you see inside months, LRCX and Oracle. So we can then click the ticker. It will open up the chart for you. There's your inside month and up. The other thing we'll see is they had the inside week in LRCX this week, triggering that month. So if we go to Oracle, this does so on a gap up yesterday, but you can see the up gapper just straight up into all-time highs, creates the shooter of the day. But you can see it scans that in-force pattern on the month. So we can scan in-force. The other thing we can do is scan for actionable setups. You can do that all the way down intraday with full time frame continuity, which is another filter. But so each night, for example, going into Friday, what we would want to do on a Friday is either create additional signals for next week. So a daily signal to create a weekly signal, or confirm what has already occurred with a daily reversal or inside bar on bright green and bright red names. So we can then go in here and we could say, well, give me any inside day, like so, and filter. So you can see there's 142. With the inside bars, since they can be taken up or down, there will be duplicates. To remove that, you can filter by one direction, and you'll see it removes the duplicate. So now these are all the inside day setups. So you can literally go through all of these, or you can filter and say, I want the stocks that move plus or minus X amount. I don't have a lot of money, so I want a max price of $100. You can filter it that way. If you want just the big movers, like ATR of 5 or more, you can have the ATR as 5, and there it is. Here's all the really big movers on here. And these are all ones on the day. So you can also filter that down to just 3 ones, like so. There's 3 ones. So you can then click and identify, okay, it's a 1-3-1 on Myrna. Tells us they contraction, consolidation, expansion. They take both sides of the range, and then contraction again. What could that negate creator do? It's an inside month. So at best, we'd be an inside month in red. On the week, it's still a 1, and it's a mother bar. So this is something we really wouldn't want to be a part of, simply because it's stuck, right? It's completely stuck in here. Now, if we're a daily basis guy and we draw this out and we're like, well, we want to try and get this broadening formation, you could technically try and do that, but we want the highest odds of a trade working out. So if this is not confirming or triggering or making signals for us, we don't really want it. And we can go through that and do our analysis on the charts across all time frames. So charter 3-1 on the day actionable signal. If that triggers, it would confirm a weekly 2 up, 2 down reversal. And you can see your take action window. Notice. See how the daily would confirm the weekly and try and take these guys out. On the month, it's a 2 going 3 rev strat month, which gives you an even bigger magnitude down into here, 253.91. So on Friday, and we also call it Lotto Friday, you could try charter below that, 272.98, trying to target most of these guys down into 268 on Friday. And let's say it does that, maybe it goes a lot further. You would have full time frame continuity down, and your magnitude on the month is to go a lot lower. So hopefully you can see this looks a lot better given the signals that it has in the rev strat month compared to Myrna, because it's stuck. So you'd want to do that on all of your lists. You can do it on a daily basis, weekly, monthly, quarterly basis, all of that. And we can then also scan intraday. We're also scanning for stuff. So if we're scanning for, let's say, this inside 60s or the simultaneous breaks on the indexes, that universe is just looking at 4 indexes. So like Sarah said previously, she'll have a chart up with just the 4 indexes. So we can have SPY, QQQ, Dow Jones, and IBM. And what you want to do is take trades, ideally with 3 or 4 of the indexes or all of the indexes in your favor. On days like today, you can see Dow Jones and IBM went 2-2 to the downside at the open. So that's a trade we could take. That's something we mentioned in the morning. SPY did this much later in the day. So they triggered it, did not go anywhere. And Q's was a 2 up. So at this point, the sellers, they did come in today and they're taking profits. These were the only 2s going down. And then the SPY did come in here and try and do that, recovering on the 60-minute intraday basis. And Q's is not doing that. So they're not all in the same direction at the same time. But what we can say is IBM and Dow Jones did simultaneous break to the downside. So this 2-2 on IBM and Dow Jones is reconfirming each other. What we prefer is all 4 indexes doing the same thing. And for example, and this trade did not hit magnitude, but it's a great example of this. It's not all 4, but it is 3. So you'll see here, Monday morning, they open as a 2 down 60 IBM, gap down, or SPY gap down. And let me get this up in here so you guys can see. And this was something, if you went back into the chat, this was something I did mention in the chat on Monday morning. So notice SPY and Q's both right here. Monday 10, 8:30. Gap down buy, coming from exhaustion risk. On the 60-minute, it's also gap down on the daily. 2-2 here on Q's and SPY is a rev strat. They're both going 2-260s. At that point, IBM was also 2-2 gap down buy to start the week. So they buy. Notice 3 of the 4 indexes confirm each other. Dow Jones, you'll see, is relatively weak, going inside 60 on the second 60. This inside 60 either confirms that rally or negates it. So when it breaks inside up, it's reconfirming that stuff. So notice IBM goes 2 up again, Q's goes 2 up again, and SPY goes 2 up again. And since it was a Monday, we were still inside weak and all this stuff. They were just too weak to take us 2 up on the week on Monday with CPI and stuff in the later part of Monday. So it works. Did not give us the 3 on the day here. You'll see similar stuff has occurred. Q's on Tuesday, 2-260s, SPY 2-260s, and IBM 2-260s. So they did simultaneous buy on Tuesday before CPI. Then they gapped them all up. In this case, what we'll see is SPY and Q's both stopped out that position, whereas IBM did not. So IBM has relative strength. You'd stop out of these ones at a loss and hold IBM into the close if you're one of those CPI traders looking to do that. Then there is additional signals, not on the 60 timeframes though, but the 30s did break back up. Q's went 2-2-2. SPY had no actionable signal. So they went back to reconfirming that, and this had full time from continuity here. And then you can see into the close, they rally, and then they gap up. So confirming signals across multiple time frames, or multiple indexes, on the same time frame. And the reason we can do this is, like we said with the simultaneous break, because it tells you at that point, they're all trying to take the offer. They're all going up at the same time. They're all reversing. And the only way that happens is if there's an algorithmic buyer that's stepping in there. So at that point, you have a lot of evidence just on that 60. So you can actually widen the stop. When IBM goes 2-2, your stop can be reversal against. Same with SPY, same with Q's. So when it does reverse against, so be it. This one did not. So this is the one you'd like to ideally add into on the momentum hammer, but hold. And when it comes to confirming and negating across multiple timeframes, the reason we do it across 4 of the same or correlated asset is because this is 4 timeframes confirming a trade at the same time. In this case, 3. Whereas when you're trading with just one stock with full time frame continuity, you are confirming it across 4 or more time frames on the same stock. So it's a very similar concept. It's just the same time frame across all of them. And again, you can do that across everything. And we did have a question in here. So what does CC mean? Current candle means, or this means current candle. So this is the current candle. This is the candle prior to that. And this is the candle prior to that. So when we're reading this, we read from left to right. This is a 2 down, 1, 2 up on AON. So if we click it, you'll see it's a 2 down, 1, 2 up on the month here. Yes, in force means in force. You're above or below the actionable signals trigger. And the other thing you can do with that is you can actually scan for failed patterns. So like if you have a weekly break, X1X, and let's say the current candle on the week is 2 down. So the current candle scanning as a 2 down, but continuity is to the upside. That would be a 2 going 3 with full time from continuity. In this case, we don't have any of those right now. It's late in the week. Doesn't look like we have any 3s in here either. You can see most of those inside weeks broke 2 to the upside, or at least looks like all of them broke 2 to the upside. So every inside week this week broke its signal up. Mostly mobile. I mean, you can do the same stuff. Ideally, you need something that has, you need a screen. It's going to be more difficult with just one screen, but that means what you need to do is, yeah, what you need to do is do your analysis beforehand, and then you can execute on mobile. But if you just have a phone, that's where you can go through all the setups on like the confirming and negating of just the Dow Jones 30 stocks, make it simple, and maybe you hone in on one setup in there. But you should be able to track at least a few. Market cap, I'm not sure. I wasn't the one that created this. Discord alerts, of course. So the Discord alerts will tag you when certain signals go in force across certain time frames. So what you can do is, and I'm not sure actually which channel it is in here. And forgive me, I just haven't done this in so long. We haven't talked about it very much. Sarah, maybe you can help me out to pick out, because you can pick certain, what's it called? You can pick certain roles. So if you just want, let's say, stocks on the weekly, you can see we open the week on Monday on the 10th. So if we go in here, Monday on the 10th, this will tell you the weekly breaks that occurred. So Microsoft, right at 8:49 p.m., tells you it broke with full time from continuity, and it tags you stocks weekly. And you can see XLK breaks too. So you know it's a simultaneous break, and you can do that. This is where, if you're on a phone, once you understand what you're looking at here, this tells you what to do right there. But what we don't suggest is just going in there and like, oh, Bank of America broke, I'm going to short it right there and not do any extra analysis. Although you can use it like that, we suggest over the weekend you understand what is going on. Because if you scan and say who's inside week, who's setting up shooters, hammers, etc., when these break, certain names will stick out to you, because this is going to be scanning most of the market here. And you can see in the morning, Pepsi breaks bearish downside, boom, full time from continuity up to the quarter. Pfizer breaks down too, so both up and down. T and Verizon simultaneously break in the communication sector. And then you can actually click that, and if you have TradingView on your phone, it'll open your TradingView app. But then you can see the 322 week. So depending on what you're doing, if you're just a day trader or if you are a weekly trader, and I apologize for blinding you guys, but depending on what you're doing, right there, you can get in and you can say, I'm a weekly guy. If that doesn't reverse, we're going down there. So I'm going to hold. And that is one way to do the strat. Again, it will customize itself to you, whatever you want to do and you need to do. There's also just, and I'm not sure, it looks like this has not been updated recently, so it looks like Tom's working on it, but there's one with just full time from continuity. Index and sectors will be another one. And gappers is another one, which we still need to do some work on, but it does alert to specific setups on the gap list stocks and anything gapping. So it's just not the biggest filter in here. Let's ask Tom. But role selection, where is that? Oh, it's in VIP. Why is it in VIP alerts? Oh, I guess it's in alerts section. Okay. Yeah. So role, if you go into the alert section of the Discord, role selection. So you can see I personally have 60 week, month, quarter, which I'm actually going to undo that. And on Monday, maybe I'm outing myself here, but on Monday, normally I lay in bed and I just look at the weekly breaks. And that's where I'll enter Monday and then add if it confirms Tuesday for the strat attack stuff. Not every Monday I do that, but if I'm up and I'm trading Monday, that's what I'm doing. And then also you can do daily signals and all that type of stuff. So it will alert you whenever actionable signals go in force, and then it's up to you to take a look. And the good part is if you can pull up 4 charts, when those signals are going in force, ideally 4 or more charts, right? When those signals are going in force, you can quickly just throw them in a chart and say, okay, well, what is going on with Starbucks? You say, well, it's a RevStrat week. It's only one actionable signal, though. It's the only one we got. And on the month, it's conflicted. 2 up. It would be slightly red. It did try, but it did not stay down. So when you look at that, you can do your analysis and say, well, it's only one signal. And then when you see Microsoft and XLK's break, you'll see Microsoft breaking, and then it's simultaneously breaking with the technologies. And then the rest of them all break, which is like QCOM, LRCX, AVGO was a 3-2, which is on the nightly vids prior to its earnings. AMAT was a 3-2, so all that stuff. And gather more evidence that way. But we are running, a little behind. We obviously started 10 minutes late, but what do you guys think? And ideally in the future, we can get those alerts that have multiple signals in force, which will be sick. My head is full. Yeah. And this is why we say you don't have to learn the whole strat right away. You'll drive yourself nuts. Yeah. So what we want you guys to do with this is you need to pick a universe. Obviously, it's going to be different for each person. And what you need to do is you need to write it down. What are you doing? Are you taking rev strats, 2-2s, inside bars? What is it? Are you trading the gappers? Are you trading the weekly universe, the monthly, quarterly signals? Write it on a piece of paper, because you can write down, and since you now know the strat, you can say, I'm taking daily signals confirming monthly signals in force, and that's your whole trade plan. You know exactly what you're doing. You know you're trading with continuity, etc., etc. So if you can write that down and do it, then you can say, Sarah, Alex, this is my setup, and maybe it's on a weekend. You're like, okay, this is my weekly setup, trading weekly, confirming the month. Is this good or not? This is my trade plan, etc., etc. And then we can give you guys feedback. So the agenda tomorrow, we're going to talk about intrinsic value with options, which is how I personally do it. And then we'll answer questions on what people are looking to do. There's other ways to do it. There's also like selling options on things that are mother bar stuck. Like the best example I can give you is this. Boeing on the year. You could have been selling options all these 4 years in here and made a killing. So there's different ways we can do stuff like that when it comes to different trade vehicles, but that's going to be about it. And then for the next couple weeks that you guys are in premium, we want to just have you guys getting good at doing one thing, learning how to do it, and we will give you guys feedback. I imagine we will also have additional like nightly meetups and whatnot to give you guys feedback and answer questions, go through the trading day, and et cetera, et cetera. Options are for selling? Yeah. Well, I can answer it right now. It's because they go to zero over time. So another thing that we can talk about tomorrow with that type of stuff is the VIX ETNs, which Rob was a huge fan of, but it is because they go to zero over time. But the way I do it is based on intrinsic value to guarantee it is not going to zero. So it's a little bit different, I guess, in that sense. But that truth is still true, which makes options a little harder. Yeah. So I guess just to give you guys an example here, the VIX, it's designed to go to zero over time. So it's the best short in the world. If you can trade shares with leverage, that's where you'd want to be. And every trader should be shorting this stuff, is what Rob would say. Personally, since I mostly stick to options, I'm not in here more that often. I do sometimes mess with the VIX when it's really moving intraday, because it's fun. Are we going to talk about delta and theta? Not really, no. It's not relevant to how I do it. And that's a lot of people, it does make some waves, I guess, in the trading space. Some people don't like it, some people do. But it's still based in how options work, so it's not like it's wrong. It's just a different way of looking at it. Yeah. So the last thing here, last class is devising trade plans. Thought that was mentioned in earlier classes. Yes. So now that you understand there are the universes and all that stuff, in the next class we'll cover the options and some of the ETNs and stuff, which are different trade plans with the VIX. But since the trade plan will be somewhat different for each person, that's where we're going to take that, and we will revise that and get that going for you guys. When trading futures, so mostly I'm trading SPY Qs, IWM Dow Jones. So I'm just trading that, but on the futures if I'm ever trading the indexes. Because each future has a stock equivalent. So like for crude oil, stock guys get to trade USL. For gold, stock guys get to trade GLD. For silver, stock guys get to trade silver, SLV. And then we also get to trade the miners, which are JNUG and GDX in the silver and gold mining stuff. But you can see we're 2-2s today. Gap up sell yesterday and then 2-2 today. So you can either decide I'm going to trade GLD on that 2 day, or you can say I'm going to go and trade GC1, which is the gold future. And it's doing the same thing. You can see in this case, it's got some mother bar issues to this guy. But since we trade the New York session, we prefer to just look at New York charts, which are all the stock charts. On futures, you'll get additional information like the overnight stuff. It's up to the trader. And if you're going to be a futures trader, you're going to be looking at futures charts a lot. So you might as well look at both, get a little additional information. Yeah, so last thing we'll talk about here. When it comes to the futures, so like SPY, you can see today 2 up, 2 down. On ES, it's going to look different, and it's actually ESM 2024. So on ES, today is a 1. So you get additional information looking at the futures. Both of those are going to have the broadening information. You can see in this case, you have the 3. And this is where we say you can look at both. You're going to get additional information. Notice the 1. You get stuck inside. What's going to happen? You're going to poke up, you're going to poke down, you're going to poke up, and then back down. And then it reclaims here at the 60. And then that's where you can participate into that stuff. Which in this case, momentum hammer 15 or the retrigger of the 2215, both of those. And then you can see they go up for the session there. Yeah, so underlying, like the ES, there is no underlying. It's a future. It's a completely different asset class. Although it tracks the S&P 500 and it has the weighting of the stocks and stuff, it's still a future. So it's a completely different asset class. We're not really here to cover futures. And the reason we don't, or the reason we prefer stocks, is because we get so much more information. If you're trading futures, you're trading the average of 500 stocks in the ES, right? Whereas if you look at ES this week, it is up, yeah? In the technologies, they're up more because the tech was a lot stronger. And then if you go to Apple, even more than that because Apple is going crazy. So we can break it down and get a lot more information for our trades compared to just 4 indexes. Although that doesn't mean that doesn't work. We just like to be able to do that. Because then in Apple, even though we weren't here for the 3-2 reversal, that 60 inside bar, you can take that and it, right? Crazy, crazy stuff. All right, guys, I'm going to have to hop off. I'm already running late. I don't even know if I'm going to be able to get to my stuff now, but we did start late, so that's on me, not you guys. But we'll talk more about trade plans, options, all that stuff tomorrow. So I hope you guys enjoyed the class tonight. Sarah, I'm not sure what you want to do for homework. I'll leave that up to you. But your homework really should be to scan. Just go in and scan, look at like 100 charts tonight, as many as you can. And you got to do that every night. That's how you get good at it. So I'll see you guys. I hope you guys have a great rest of your night. See you guys tomorrow, and adios.